Ethereum, the second largest crypto, has been on an incredible tear recently, experiencing record inflows, positive price action, and a ton of bullish momentum. In today's video, I'm going to break down the numbers behind Ethereum and what they could tell us about the future. Now let's get into it. Before we jump into it, be sure to like and subscribe. And if you want to learn more about the sort of numerical on-chain metrics based analysis I'm going to do in this video, check out my newsletter, newsletter.dynamodefi.com, where I go into all of this in much more detail twice a week. All right, so what is the deal with Ethereum? Well, if we look at the price action, then you can see that it's just had an incredible month. And this is after, truthfully, years of Ethereum underperforming other tokens like Bitcoin, like Solana, as well as many smaller altcoins. But suddenly Ethereum is hot again. It's been one of the top performers recently. Now, no, it's not back to its high from December quite yet. However, it is very close, and it is up several times, more than 2x from its low back in April. But what we want to talk about today is, okay, why is this happening? What's the momentum that's actually pushing Ethereum to outperform? And what are the reasons to think that it could continue to perform well in the future? All right, so to start, let's talk about some of the recent news. This is a few weeks ago, but Robinhood decided to launch its new on-chain application as an Ethereum layer 2 on Arbitrum. So it's not on Ethereum mainnet, but it is part of the Ethereum ecosystem. But that's just the first thing. We also have NASDAQ. NASDAQ submitting an updated 19B4 filing to the SEC, which would add staking to the iShares Ethereum Trust. Now, for those of you who don't know, that is the BlackRock Ethereum ETF. So basically, BlackRock is pushing to add staking to their Ethereum ETF. And what that would mean would be that in addition to investors benefiting from Ethereum price appreciation, they would also earn that nice, cool yield from staking ETH. And so then suddenly you have an asset that is both acting as a beta to tech stocks, which is oftentimes how Ethereum trades, but is also has a native yield, which is makes it somewhat unique because most tech stocks or assets that are correlated with tech don't actually offer any native yield. And then on top of that, you have an increasing number of companies are looking to hold Ethereum on their balance sheets. Here you have this news from just the past few days. SharpLink bought 10,000 ETH, and their stock went soaring. That's not really our concern. However, this makes them the largest corporate holder of Ethereum in the world, apparently holding 1% of all Ethereum in circulation. So just like you had with Bitcoin in 2021, for people who are around, remember that was huge news that you had companies like Tesla were holding Bitcoin on their balance sheet. Now you have companies starting to hold ETH on their balance sheet. And then another thing that's important to note, and we're going to talk about inflows a lot in this video, but something that's important to note is that a huge driver of Bitcoin's price action recently has been MicroStrategy. Now, I don't have the numbers in front of me, but you can actually look at the amount of buys that MicroStrategy has had since the middle of last year, and a huge part of this run-up has been driven by MicroStrategy buying Bitcoin. And now you have companies that are starting to copy MicroStrategy's financial engineering for Bitcoin and apply that same thing to ETH. And that can create a self-fulfilling cycle, especially because Ethereum has an entire ecosystem around it. And as ETH price goes up, that creates a positive flywheel, which can attract more attention, more inflows of other assets like stablecoins, and ultimately cause the entire ecosystem to expand in other ways that are actually more sustainable. And it's actually not just corporate treasuries that are buying Ethereum. If you also take a look at Ethereum ETF inflows, then you can see that this month so far, the month's not even over, but there's $4.1 billion of ETF inflows, which is by far the most that there's ever been in a single month. The highest month previously was this past December with 2.08. So you have nearly 2x that, and the month's not even over. Additionally, Ethereum ETF inflows are actually comparable to those of Bitcoin this month. You can see that Bitcoin is at 5.567 billion, Ethereum is 4.108 billion. And this is pretty unprecedented. Now, we only have about a year of data on this, but if you look historically, there has not been that much of an appetite for Ethereum among the community of people who invest in ETFs, and that is changing. That's changing in a major way. And let's see if we just look at Ethereum. You can see that a substantial portion of all of the Ethereum ETF inflows ever have happened since the start of July. In fact, almost half of them have happened since the start of July. On-chain inflows are also up. These are net inflows to Ethereum. And you can see that this past week was actually a record week for net inflows. Now, data here doesn't go back to 2021, so it's very possible that in 21 it would have been higher. But since as far back as we have data in 2022, this is the highest week for net inflows. So basically, money is pouring into Ethereum. And what does this mean? Well, the first thing that it means is that the on-chain ecosystem is growing, and I'll clarify exactly what I mean by that. In short, the numbers show that money is pouring into Ethereum right now. Question is, where is it going, and what does this mean for the future? Well, the first place that it's manifesting is in the stablecoin supply on Ethereum. These are coins that are backed by or otherwise pegged to a fiat currency, typically the dollar. And this week was a big week for stablecoins because you had the Genius Act signed into law, which establishes a regulatory framework for stablecoins in the United States. Additionally, it was a huge week for stablecoins on Ethereum, where the stablecoin supply grew by an incredible 4%, and that's $5.2 billion. So we're talking big money here, right? Stablecoins are growing by huge amounts in absolute terms, and really huge amounts like in not just crypto terms. In virtually any scale, $5 billion is a lot of money. And you can see that this is driven by fiat-backed coins like USDT and USDC, as well as crypto native tokens like USDE, DAI, and Sky Dollar. You just have across the board among the top stable coins on Ethereum, you have the supply growing, and you can see on a longer time frame that supply has been growing substantially. Ethereum is the top chain for stablecoins at the moment. And I think that's one reason why Ethereum has garnered so much momentum recently, is that it's the biggest chain for stablecoins. Stablecoins are being legitimized. They're being regulated in a way that will hopefully allow them to grow. The U.S. Treasury Department has explicitly stated outright that they view stablecoins as a way to strengthen the dollar, and are forecasting things like a $3 trillion stablecoin supply. And just to bear with me for a second, the current stablecoin market cap is $130 billion on Ethereum. Ethereum is about half the stablecoins, 49.86%, so 262 total. If this goes to, let's not even say 3 trillion, like the Treasury Department was saying, let's say 2.6 trillion, because it's a 10x. And I think one of their other forecasts was closer to that anyways. So 2.6 trillion, 10x. Assuming Ethereum can keep its ratio of stablecoins, then you're going to have a stablecoin market cap of $1.3 trillion on Ethereum. And for contrast, Ethereum's market cap is currently $434 billion. And if suddenly Ethereum is securing $1.3 trillion of fiat-backed stablecoins, that's going to be a lot of value, and it's going to be a lot of value that is derived from the security budget for that ecosystem, and ETH should benefit. Additionally, if we look at DeFi stats, DeFi being on-chain financial applications, of which Ethereum was a pioneer and is still in many metrics a leader, Ethereum was actually losing dominance in TVL for a long time. It was down all the way to nearly 50% in May, and now it's back up to 59% dominance. And the last time it was at 59% was all the way back here in last July. So it's been pretty much exactly a year since it was at 59%, and it reversed that steady amount of decline in a few weeks. Now, keep in mind, a large part of this has to do with the price on Ethereum going up, and because a lot of the deposits in Ethereum DeFi are going to be in the ETH token. But I think this at a minimum speaks to the magnitude of Ethereum's outperformance recently. And at a maximum, this speaks to the fact that Ethereum DeFi, despite the fact that there's other great growing ecosystems, we love Solana on this channel, we love the Ethereum layer 2's base Arbitrum Ethereum in terms of absolute money involved is still king for now. But before we wrap up, I do want to share that there are some reasons to be concerned about the health of Ethereum's DeFi ecosystem based purely on the numbers. If we look at the TVL growth here, then it looks phenomenal, right? You'd say, okay, we had this bubble in 21, but you retrace and you look at a 5-year time span, this looks like something that's just steadily growing. Well, look at it in terms of ETH. Then you do have that growth up until April, but remember that's when Ethereum's price was low. But you'd see that the TVL in terms of ETH has actually decreased recently because the price has gone up. And now we have to wait and see. What we would ideally want to see here would be this retraces, but then new money comes in. Those stable coins we saw, those end up getting deposited into DeFi, and then overall deposits in DeFi applications rise and far surpass their 2022, 2021 peaks, both in terms of USD and ETH. However, again, we have to wait and see whether that will happen. The other thing that I would note is that if you look at the actual cumulative revenue of applications on Ethereum, we can look at it monthly here to make it a little cleaner. You can see that this is far down from its peak in 22, and it has been flat for more than a year now. In fact, about a year and a half, it's been flat with a few peaks and dips. And what this is, again, is the sum of the revenue on all applications on Ethereum. And so basically what this signifies is that at least on Ethereum mainnet, people are not producing, they're not building apps that make money. And the classic objection to this is always, that's because Ethereum went with the layer 2 roll-up roadmap. And so you have somewhere like Base, where TVL is up, app revenue is, well, it's actually not up there either, but you would add that to Ethereum. And then you have Arbitrum, for example, same thing, right? You've got TVL, you've got app revenue. The narrative is you should be adding that to Ethereum. I understand the argument here. I really do. However, my opinion is that while you could look at this as part of the you should look at it as part of the Ethereum ecosystem, and you could consider it as part of like the nation. If Ethereum was a country, this would be possibly part of their GDP. However, I don't think it's exactly a one-to-one comparison, because the value that Ethereum's going to accrue from having applications on its mainnet is going to be more than those same applications existing on a layer 2. Now, in the long run, the good thing about the layer 2s is they allow greater scaling, so you could, in theory, have apps that far outpace the Ethereum mainnet in terms of how much revenue they could generate. But we're not there yet, and so similar to how we have to watch and see if Ethereum TVL in terms of ETH starts to uptick now that the chain has some momentum. Over the next months and years, we'll have to watch these layer 2s and see if the economic activity on them can far surpass what's possible on Ethereum mainnet to make up for the fact that mainnet is accruing less value from each unit of activity. All right, if you like this kind of on-chain metrics based analysis, again, we cover it in much more detail in my weekly newsletter. It's, I think, the best metrics based crypto newsletter that exists. We incorporate everything from fear and greed index, total value locked, ETF flows, stablecoin indices, funding rates, etc. I could go on. The idea is to give you a numbers based understanding of where the crypto market is at today. Thanks for watching. If you want more videos like this, be sure to like and subscribe. And until next time, this is Dynamo DeFi.